Hello guys, okay, welcome to another video. So in this video we are going to discuss why your chart pattern fail. you know a lot of people find it difficult to understand why their chart pattern fail, like chart pattern like head and shoulder, double top, double bottom. But today we are going to talk about head and shoulder, and as a SMC trader, um, I will explain why it fails, and probably I hope you have something to learn from this video. So let's dive into it. First of all, most people don't really understand that chart pattern is not just a pattern. It's a form of uh, uh, liquidity build that the market do, but it come out as a chart pattern. So, and market move not because of the pattern, market move just because of liquidity. So this head and shoulder, the inverse one will be inverse head and shoulder, but we are going to talk about the head and shoulder here. So if I'm to draw the inverse head and shoulder like this, it's going to be like this. And the way we were taught is when the chart pattern has been confirmed like this, then we wait for the retest of the neckline, then we sell. Why this fails sometimes is because we were not taught that market don't really respond to this pattern. It responds to the liquidity that has been printed by this pattern. So after some years, I discovered that market don't move based on any pattern. It moves based on liquidity. Both double top, double bottom, head and shoulder, all those stuff, their liquidity, their market is building up. So it just show up as a pattern. So people that are teaching us about chart pattern don't really teach us the concept behind it, the in-depth of why that chart pattern is working and why it's not working sometimes. So in this video, I will be the one to teach you, and I hope you will find this video very, very valuable. So look at this. This is chart pattern. And as a typical trader, we were told that if the market has confirmed the neckline, like break out the neckline like this, so because we have our head here, we have our left shoulder, we have our head, then we have our right shoulder. So we are expecting the market to break down after creating left shoulder here like this and mitigate this, let's say left shoulder, then we are expecting the market to do something like this, then drop. Then after this pattern has been confirmed, then we can now wait for retest of it. Then boom, market will now drop. So probably our entry will be looking for entry confirmation or entry here. Some people will put their stop loss there and so on. Then they will target wherever they want to target. These are what we were told. But in the recent, this is how chart pattern formed. So let me give you an instance. In the recent, if the market is giving us bullish momentum like this, and suddenly, let's say we have a complete structure as an SMC trader. So for me, then market creates another one like this. So, and we have a situation whereby market come like this, the market drop. So let's say as an SMC trader, this is how I will mark the setup. Now, where is my break of structure? Because market took out this liquidity like this, because market took out this liquidity, then this level will be my break of structure. So this level will be my what? My inducement. This level will be my inducement. So I will expect the market to mitigate something here like this. Then the market should come and break this high to give us another break of structure. This is the first break of structure. So because this is where the market created inducement, so I will expect this to happen. So but in a situation whereby this failed, that's when a typical trader will be saying, oh, we have left shoulder here. A typical trader will say we have a left shoulder here like this. Then they will say we have right shoulder here like this. Then they will say they have head here. So you can see, so now they will mark this level as their neckline. Say, okay, now that the left hand head and shoulder has happened, what are we supposed to do? They will be waiting for a kind of entry at this level, then they will want to sell. So that's why they get stopped out, because if you are attempting to sell here, there must be a criteria that will make you to position for here, and I will explain in this video. First of all, the first criteria is that before you can try to sell at that particular point, market must create another inducement. Like for example, market must create something like this, drop. So this level serve as your inducement. So for me as an SMC trader, I will mark this level as a change of character. Now, and for me to sell or to enter this market, market must come and take out this POIs and this inducement, this liquidity. So, and not just taking out this liquidity. For me to still sell here, there must be either market sweep this liquidity and give me a sell confirmation. But this liquidity will be the major criteria. If the market sweep this liquidity and give me lower time frame confirmation, then I can sell to the downside. But if market do not, and probably market close above here, this level is not going to hold the market. So it is a signal, is a sign that the market is likely going to come to these POIs and do what? And mitigate here, then before the market will drop. So if a typical trader is looking for just a chart pattern and want to do what? And want to sell from here, it will be stopped out because market need more liquidity before the market can drop. I don't know if you're getting it. So let me make this thing a little bit clearer. Sorry. Let me make it a little bit clearer. I want to take this out. Let me shift it here. Okay. So you can see in this situation now, we have a situation whereby I still want to take it down. Okay. So we have a situation whereby market has created head and shoulder for typical trader. If there is no inducement, trust me, this is exactly where the market is likely to come to. This level is going to serve as a liquidity for the market. That's why you will see a situation whereby market will take out this liquidity, will mitigate this extreme by coming like this. You will just see market will mitigate this extreme, then market will drop. So it's not that this head and shoulder failed, but you were not taught how to actually understand and how to actually use it. So if any head and shoulder is likely to hold, if head and shoulder will hold like this, let's say this is the neckline that you want the market to come to, one thing that can easily happen is market will use this level and create liquidity and drop. So this level will serve as an inducement. Then that's when you will see the market will go back and mitigate probably the next POI, then market will drop. So this is why a lot of typical traders have it confused, because they don't factor liquidity into their setup. So, and I will give you an example on what is currently printing out on GDP USD. If you can relate, I hope you understand it better. But this is the background to it. So if your head and shoulder, is forming like this doesn't mean that markets will only respect this level and drop. No. Wait for markets to either create a liquidity for you. After market has done that, then you understand that this is my liquidity point. Then wait for market to do what? Wait for market to come back for this liquidity point like this. Probably market will mitigate this order flow, then market will drop. So, but if you are entering here, your stop loss must be at this level, because market can easily push up before it drop. So that's how to trade head and shoulder. And if you can apply this into your rules, you will see that you have a lot of advantage over the market. So let's look at what GDP USD is currently doing, because I saw a lot of people trying to think this is an head and shoulder. Yes, this is an head and shoulder. If you look at it, we have this GDP USD in daily time frame. We have our left shoulder, we have our right shoulder, then we have our what? We have our head, we have our right shoulder, we have our left shoulder. And this level, most people are expecting the market to respect this level. Exactly what I just explained. But do you know why this level failed? Because markets actually use this as a liquidity, this pullback as a liquidity. If you don't understand, you can watch my video on how to identify when market did a valid pullback. Let me expand it so that you guys can see. Markets use this as an inducement. And what did market do? Market mitigates this as a POI. And market is now moving towards the down direction. So anybody that is trying to actually sell in this place, that is looking for sell here, if that person is not patient enough, or probably he just put his sell limit here because head and shoulder has been done, put his stop loss here. If it's lucky, it might not be, but it depends. A lot of people will still put their stop loss there, depending on the time frame that they are entering the market. Some will put it here. So, but if they are not that greedy and they put their stop loss maybe above here, then they will still be in the market. But this is going to create a lot of emotional trauma for them, just because they don't understand that the right place to enter this market, first right place to enter this market, is this other block. Then the second right place is this extreme order block. So if this fail, market is likely going to return from this level, because market will use this high, market will use this high as a liquidity, market will use this as a liquidity, then market will now mitigate maybe something like this, then market can now drop. So that's exactly what I'm perceiving, what I'm seeing on GDP USD currently. So and I understood that I'm not going to sell here. I have to wait for market to mitigate this level before I can start thinking of selling. So so that's it for this video, and I hope you find it interesting and educational. So so if you have any question, feel free to contact me, to message me. I'll be glad to respond to your message. So what other scenario that can happen in this uh in this setup now? What other scenario that can happen is probably market will fail this level, mitigate here, then drop. And if market refuse to drop, then boom. So it means that this head and shoulder is not really going to work. And I'm still seeing something like this. People, this is not the only head and shoulder. Market is still also forming another head and shoulder below here. You can see head and shoulder below here. But this head and shoulder has not really formed because no neckline has been taken out. Sure you understand. So until this neckline has been taken out, that's when we can say head and shoulder. And based on what I explained now, if this neckline has been taken out, let's say market take out this neckline now, then this low will serve as an inducement. Then probably you wait for market to do this, then before you start looking for buying. So in which way we have a double head and shoulder formed in this current setup like this. Double head and shoulder. We had it formed. Now, if you look at this one head and shoulder. Then market was market refused to respect this, then create another inverse head and shoulder. So whichever one market want to go to, then is left to the market. So if you want to respond to this one, or if you want to respond to this one or this, then we'll be watching. But currently, as as far as I'm concerned, as based on my experience in the market, I noticed that this head and shoulder is still valid, because the head and shoulder, because people are looking for entry here, doesn't make the head and shoulder valid. The market has actually come for this inducement, then mitigate this level, even sweep this high a little bit. So that's a sign that we are likely supposed to drop to this level. At least first level target is this level. So if also having any, you are having the same analysis with me, you can let me know. And anyhow the market plays out, I will still come back and update this in this video. So thanks you for watching. If you like this channel, you like this video, you can just subscribe, follow me and subscribe, like and share. Yes, that's how to say it. So thank you guys. Bye.